The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. This is, of course, the Tuesday edition, Tuesday, 11, 12, 13. I love that. 12th of November. My pleasure to be here Monday through Friday, every market day. Thank you, Steve Rhodes, for 2 great hours, education and insight and positive thoughts. Great shows. And let's go straight to the numbers here. The Dow's been struggling to move higher, but it also is holding quite nicely, just minus 24 after being really close to all-time highs at 15,758. The S&P is down 3 at 1768. The comp index is down 5 at 3914. You've got gold here down 6 at 1274. Gold has just had such a tough time. One of the reasons is there's been some strength in the dollar, which is down just 5 ticks at 81.19. Even more importantly, we've got, well, let me just say silver's down 37 cents at 20.90, but we've got that high-grade copper right there at the 323 area now. And I need to just go straight there. High-grade copper at HG. This will be a left-handed show today, and a right-handed show because my left hand is holding the phone. 2 sets of technical issues there. Couldn't get onto my usual thing we call the brick, which is our fantastic, what an age we're in. I have right here a professional recording studio in my office. And basically what it is, it's just 2 small little gizmos. And, of course, got the headset, microphone, and everything. I remember as a professional musician, when we walked into recording studios, they were so, the studio was so expensive to put together. Putting the recordings together was so expensive. And what an age. We're actually in a deflationary age in many aspects. All right, let's get back to our numbers. Oh, and then the other was to go to Skype, and all of a sudden I can't get Skype. I just didn't even recognize it. They kept saying sign in. What do you mean sign in? I'm all ready to sign in. Where are you, Mr. Skype? All right, so we're on the phone. We've got that high-grade copper is turning down. This is, to me, this is a little bit of a heads-up. It's saying that, yeah, I see upside potential in the market, but mostly it is within that trading band. I'm going to show that in a moment. Let's just finish those numbers. But that high-grade copper, let me tell you, high-grade copper closes under 3 at any point, and a 3.23, 3 is not too far away. Just as 3.5 would be 3.5, 3.6 would be fantastic. It's just not showing signs of strength right now. And that says to me, be a little careful here. Be very selective. We're actually raising a little cash rates, raised our stops in our long positions. Don't mind getting stopped out. Raising cash, I think, is quite important. Looking more towards the short side here, trying to get more shorts, and we'll see how that works out. Mostly, we've had some fantastic moves in some of our stocks, but they've reached peak F, peak D, in the Chapman Wave methodology. For those of you who did my course on Friday, you know how important that is, how many dozens and dozens of times you've seen pullbacks there. I'll show some of those stocks in a moment. Let's just go on here, because bonds, this is what I looked at this morning. Did a whole thing, a study for my subscribers on the TBT, which is the 200% short to 20-year Lehman T-bond fund, and the TLT, which is the 100% long. And I'm waiting to see, are bonds going to spike here? Is that going to be a clue to say, hey, watch things, because the VIX is right at that level where it gets to the support level that says, hey, around here is where I'm starting to get ready for a bounce. I don't have to, but this is where I get ready. And if some of your best, in my work, if some of my best stocks are starting to show that they're at D's or E's, I have to put that together with the whole panoply of technical indicators that I use. I also then wanted to look at, okay, so now we're ready to talk about some of the other things. You know what I'd like to do? I've been wanting to do this for a few days, but of course I've been really busy, and yesterday was more catch-up than anything else. Investors Business Daily. Now, I know a number of you look at Investors Business Daily. You get great picks from Investors Business Daily. It's more a resource, and then at some point you'll pick some stocks. This is it is for me. I consider it a really valuable resource, but I do my own homework because my technical, my methodology is very different, very, very different to the methodology used, and neither one is good or bad. They are just what they are. It's a methodology. No, I shouldn't say that. If it was bad, it wouldn't be a methodology. It's both are good. They are personal. So let's look at what I want to focus on here. I'm going to go to that right now because if I don't do it, I'll never get to it. NUS. That is New Skin Enterprises, marketer of personal care products and nutritional supplements under the the New Skin and Pharmanex brands. Well, it's trading at 100. You got to get NUS, not NES. Oh, look at that! What a pullback, 6% on NES. But we're not interested in NUS. I will go to one of the sharp moves down today is a stock that. A stock that, for a moment, I actually forgot what the stock was. I remember the chart pattern perfectly. It's Sarepta Pharmaceuticals. I'll look at that in a moment. Gave a fantastic signal. I got a feeling I discussed it on my show. Either that or I did a lot of work on it for myself and said, this is not for going long. I hadn't thought of going short at that particular point. But, I mentioned it. Let me just show it here. SRPT. Made a peak F-top, SRPT, trading at $14.58, down a little bit, down 60% at 22 actually. So what we're looking at here, 55.81 with the technique. Oh, man, I meant to mention this on I wrote it down and I forgot all about it. I wanted to mention it as a technique that I've been developing for about 2 years now. But over the last year, I've started to use it a lot more. I used to call it a monthly two-bar reversal. Then I said, no, a monthly and a weekly two-bar reversal. Then I got to a point where I said, you know what? This is like my silent, I had a whole webinar on my silent indicators. And they occur not necessarily at tops. They could be, but they could be a bar before or a bar later. Certain candles, certain round numbers, certain things like that. Well, look at this. Here's another one. 55.81 was the high on the 7th of October. 55.61. I wrote 81, but it was hard to see, I guess. 55.61. Let me just change that now. I'll use my other hand. Here we go. I got it. 55.61. And then the very next day, the high is 55.61. Goes to 55.48. Very subtle. And then it pulls back. But that wasn't the issue. The issue was it was a Chapman wave peak F, potential peak F. Remember that now. What it does is it pulls back sharply. And that 9-period moving average that was a beautiful source of support, it walked the 9 EMA. Now it's treating that as a resistance level, a repellent level. And then what does it do today? Gaps down. So you've got an alternate count that I typed in here in the weekly. Wow, I'm so sorry I didn't show this to the folks. Well, I'm showing it now. But it would have been perfect Friday because look what happened today. There was a trend line. I did discuss trend lines and how you can use them. Look at this trend line. Expanding wedge formation. And that wedge formation breaks down today and goes plop. That wedge formation says, this is the same kind of wedge as on the upside, that if there's a break to the downside, you could go 1 to 1. Show this here, look, 1. I usually do it to the side. Actually, it's the same angle because angles are very important in my work. So I go like this, and then I go, new parallel. Oh, that was the wrong new parallel. Didn't mean that. Right there. New parallel. There you go. Thank you. And I go down from here to here. And what does it say? Be very careful. This thing could even go down to the $7.20 to the $6.80. Oh, my goodness. Okay. So that was that. But that wasn't even the issue. The issue was there was a left side. Oh, I'm so sorry I didn't do this. An unbelievable from 2006, a left side, right side price time match that went right to August. And then what happens is, and there was a rising wedge that I sometimes draw as 2 points that are going to the same area. Well, it made its recovery high that month, but it didn't hit the A5520 level. Instead, it went peak D, A, B, no, let me say this again, DA or EB. And then what does it do? It goes even higher. Oops, that should have been an F. And then it goes to a potential peak F/C. And all that's saying is the technicals at that point were good in the MACD. The stochastic was starting to fail. It was a heads up to say you'll need the weekly to come down, but that can only happen if the daily starts to come down. And that's exactly what happened, the daily, then the weekly. So it was an example of where I'm using chart formations that repeat over and over and over again to say, and the technicals and the Chapman wave to say, be careful because you've got an F in the daily, a potential peak F in, and that was confirmed by the close under the 9 EMA. I just didn't update it in the weekly, and that says that the monthly might be vulnerable. And you go step by step. And all it says is, hey, get out of there. Don't stay in there. Don't even think of buying it. Now, I'm not sure about the shorting because the shorting should have been way up there. All right, as it failed around about 46, between 44 and 46. Actually, I'm pretty sure that if I was watching close enough, I would have used this particular bounce here at 42 to say, okay, maybe we can initiate a short. I didn't do it. I'm just saying that's where you could do that. So I just wanted to show how these peak F tops can be so very, very important to monitor. Now let's go back to our story here. So IBD, we've got NUS, and what NUS, and what is it saying? It's saying I've made that peak C1, C2. You remember like the Qs? I just want to use an example here. The weekly is in D. The monthly is in E/B. At this point, I don't have to make a decision about whether it's E or a B because you're going to be using other time frames. So the daily has got that peak C1, peak C2. Hey, wait a minute. Haven't we heard that before? Look at this. QQQ, peak C1, C2. Holding quite nicely, but it's still pulled back quite a lot from that. We can call it a phantom peak D because it's C1, C2. But wait a minute. If I remember correctly, I looked at a chart the other day. Was that soy? No. Soy's acting very well. Oh, I wrote it down somewhere. Soy's acting very nicely. This is a very strong leg A up in soy. This is soybeans. I'm looking at the continuous contract. Trading really nicely to the upside, broken out. Had made a peak E. That wasn't the chart I wanted to look at. The chart I wanted to look at, I wrote it down somewhere. I will find it, and we'll be right back. Basil Chapman, Tiger Conditions Hour, looking at a market that's kind of holding well. Bad news is what you need to keep going down, and we haven't yet got the bad news. I'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and I did find, yes, it was the soybeans continuous contract made a peak T1, and then just failed to go above 14.06 and a quarter. It went to 14.05 and a quarter. On the 3rd of September, that's like a phantom PT, and it goes PC2, and kaplop, it comes down. Nice bounce up right now, so I just wanted to clarify that. I remember I saw it, I just didn't pull the chart back far enough. Let's go to our first caller, Rich in Tampa. Hi, Rich, how are you? We've got Rich. I'm pretty sure. Oh, Rich dropped. Oh, I'm sorry, Rich. I believe that you want, if I'm correct, that you want to look at the Australian dollar currency pair with our dollar. It's pulling back very sharply. It's trading at 0.93059 right now. I would be very careful. If you're short, I'd stay short. What you need to do, if you're looking at a short, is to see that it takes out 0.92796. That is the low of the 30th of September. If it does that, if it holds it and bounces, I'd still treat it as a bounce right now. Now, one of the things I'm looking at is the way it was repelled at peak C in the Chapman wave at the 200-period exponential moving average. That is very important. And I'm going to also mention, I just want to finish putting this in this. There you are. Is that the monthly chart is still pretty negative in terms of time. It says that the upside could be limited to about the 1.95 area, to the 0.95 area, but there's a little H pattern that's forming in the monthly chart, and that says be a little careful because there is a flaw, and that flaw that I mentioned before is in this case, in the monthly chart, it's 0.8847. So I'm looking at this and I'm saying the Australian U.S. dollar currency pair, having made a peak D top in the daily chart, has had what I call an Eiffel Tower. Let me just type that in right here. Always put it in parentheses. No, with the. There. Oh man, I'm not typing correctly because it goes to the wrong thing. 1, capital A, lowercase a. Now you'll see this exactly. This is what I call the Eiffel Tower pattern. A whole bunch of things occur. Let's give it a nice big fat 28 pica, and then we're going to go to, there you are. That's the A pattern. It goes straight up, like that, and then straight down. So when we're looking at this, I'm saying to myself, that pattern says, if it holds, if you're thinking Fibonacci and it holds just above 100%, then that's going to be good. But if you're thinking the full count from the low to the high at peak D and then all the way back down in trough, that's trough 57. I'm just looking at this as 5711. 5711 parallel. So it's A, B, C. This is trough C on the way down. I would still not be interested in going long here. So if you're short, then I'm going to say stay short. If you are long or wanting to go long, you have to please wait for the low of the 30th of September to be tested. If it's tested successfully, you can have a nice bounce, can bounce all the way to the 9-period moving average of 0.9424. All I'm saying is that, yeah, maybe you can expect a leg D up in the weekly chart. The pullback's a little too deep, though. I'd be hesitant. I'm thinking more sideways at best, down at worst. So at this particular point, it hasn't shown any sign of strength. I'd be a bit careful. If you're long, I'd have patience. I wouldn't get in. If you're short, stay short. I'd lower the stop, and the moment it touches, you don't even have to get to 0.92796. You can go to 92870. The moment it gets close there, take off some of your position. Let the rest ride with a much tighter stop. If it goes right through, then what I would do is I would lower the stop to the just a fraction above the left side low of the 30th of September. And if it plunges through that, I would lower the stop on part of that position so that you keep a call and you take off as it's going down. Would I add if it broke down? There were other circumstances where I would add. I'm still looking at the MACD in the weekly that says, hey, looking out, this still should find some support and have a pretty decent bounce at some point. So that's my recommendation. So I'm going to go to, let me just see. Oops, I lost my mouse. This is one of those days. Huh? Well, you just handle it. You keep going. We've got Joe in Fort Collins. Hi, Joe. How are you?
I'm well, sir, and yourself?
I'm well, thank you.
Good. Last week I called you about a Canadian stock. Trades on Toronto, and you weren't able to pull up that Toronto symbol, but I found Nicole Thinkorswim, and they gave me a 5-letter...
Yep, I've got it right here, except I have one problem with it. This is...
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today, 'today, 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 'today,
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Chapman, Tiger Technicians Hour, and we are on. Wait a minute. Whoa, I did find it now. I have to get it back again with Joe and PREGF. Let me just get that again. PREGF. Now, what I have with this, do you own the stock? It's at 1.3331?
Not yet, sir.
Okay, so you would be looking at it, buying it Canadian, right?
Yes.
Now, I
probably
have
around $1.10 is what I was looking at.
How much?
Around $1.10.
Okay, so here it's 1.364. Maybe that's the currency conversion. I don't know, whatever it is. I have a big problem with it because I have a misprint of, you'd love to hear this if you owned it, of $18.70 back on the week of the 12th of July. I was trying to get rid of it, and I'm going to do it here. In fact, this is what I want you to do. A white background. I wanted to go to a different chart. Give me one. I'm using one hand, so it's going to be a little tricky just in terms of white time frame 06. White background. That's it. Okay, here we go. I'm going to do it on another chart, and I'm going to show you what I'm looking at here. So this is the daily. That's fine. So it's PREGF, I believe. Yeah. Now, so the daily chart also has that problem. So I'm going to shorten it up to there. Now I've got the chart. That looks great. Okay, let me just do a wave count. That low there is 6230, and that low there is 625. So that's the low. So it goes A, B, C, D, E, and this is leg F right now, but it's still holding very well. what I want you to do is I want you to go to a weekly chart, and I'll just grab this right here, and I'm going to turn it into a weekly chart right there, and I'm going to go PREGF, and now what I do is the date is the week of the 12th of July, so I'm going to go here, and I'm going to format the symbol. Oh, it's double. No. But that would be single.
Doesn't that drive you nuts when that happens?
You know, I get used to all this kind of stuff because it's happened so many times. My only problem here is that because TradeStation didn't have a way of making the candle outlined, unless I put two different charts, one on top of the other, it turns out that that when I do my work, so that was, let me just make a note here, 7/28. When I change one chart, I have to change them both. Otherwise, it shows up, it's all wrong. So let me see this. I've got it down once. Uh-oh, it didn't change. This is going to be one of those days. I can tell. It's a challenge. 7/8/23. Oh, I don't want 10 years back. I don't. Oh, last date. That was a mistake. Last date is today's date. Day is, I remember, 12, 13, 13. No, not 12. It's 11. 11, 12. 11, boy, one hand. 11, 12. There we go. Okay. So I'm going back, not years back. I want weeks back, and I want to get the chart just so that we can look at it together. So that July would be about, let's just say July, August, September, October, November. So that's 4. I can make it 12 easy. Let's go 12 weeks back. There we go. 12 weeks, and we are set. There it is. Not enough information. Okay. I needed to go back further, but I've got that one bar that's messing everything up. So I'm going to do this. I think I'm going to do this. I'm going to give you an idea of what I'm looking at based on what I could see, the little bit I could see in the chart as I was looking at it on a monthly basis. There it is. Okay. So this thing doesn't have much volume, you know.
No, sir.
But you have to make an appointment to get a ticket on this because there's just nothing going on. I know exactly what I'd like to do with a stock like this. I'm looking at it and it's in a rising trend in the weekly. It's in a rising trend in the monthly. And this particular point, it's acting very well. I'm going to go by my American chart, not your Canadian chart. Maybe if I have a chance, I'm going to put it down here, PREGF, and that is called PRE Energy. And I'll look at it in the Canadian. I'll go to some site and I'll find it. So let's leave it for now. What I'm going to say to you is I wouldn't buy it at this particular point, even though it's kind of a nice-looking chart, but I've got the technical starting to pull back. I would look at it, if you go to the American site, which is PREGF, you'll find it under that name. And what I want, it doesn't matter what the price is because you got the same chart formation. Look at the day of the 31st of October, that low. I would like to see if it tests the low of the 6th of November, write that down, and the low of October the 31st, which is a little bit lower. Inside there, if it holds and then starts to show a little bit of strength, I would nibble on this with at least a test of the high of the 8th of November. Okay. But other than that, to buy it right now, I can't give it to you. I really would like to have the weekly and the monthly in front of me. If I can get it in the next 2 days, I'll see if I can check it out in greater detail. But my eye says right now, I probably wouldn't go into it at this particular point. It's had a very nice run. It needs to pull back. And if that pullback takes out the low of October the 31st, I would say hold off completely. Let's wait for a test of the gap. And that gap is way back on the 15th of October, the 15th to the 11th, that area there. So I hope that helps you, but I'm not that constructive in giving you the kind of information that I usually like. This one dot right here has thrown the whole thing for a loop. Otherwise, I would like to do it, and I'm not able. There should be a way I could just eliminate that week, but I just don't remember how to do it right now.
Yeah, it's tough to get rid of those bad ticks. It really is.
Yeah, it's a bad tick. But I think it's also because, look, today, Scott, the volume is 9,100. Yesterday's entire day volume was 43,600. So I'm going to recommend that you have a price that you want to enter, you have a price that you want to exit on the downside as a stop, and you have a specific goal, and if you are in it and it starts to move up nicely, to put a stop in is not going to work on this. No, to sell it at a price that it's trading at, like 1.3640 right now, you probably won't get it. You'll probably have to put it in a tad lower to get it. So just be prepared. You've got a little bit of leeway on either side because it trades in such low volume. But other than that, the chart formation on the daily says nice action, but now it's showing weakness from the high that it made on the 25th of October, the cup formation going to the high of the 8th, way weaker technicals. The technicals are not concurring, so I think it's going to be pulling back, and if it pulls back, that's the support you want to have hold. And over the next couple of days, I'm putting it down here. I'm going to try to find it on the Canadian market and see what I can do. Hope that helps you a little bit.
That's great. Yeah, the Canadian is PRD, Paul Robert David.
Okay, I don't. Okay, Paul, then I will put that in when I try to look for it on Canadian. I do have a particular service. I can't get it now, but I'll check it out.
Okay, yeah, and I called Thinkorswim the other day and told them about that Canadian, and they said that all of their Canadian stocks on their platform end in GF.
Oh, okay, GF, okay.
Yeah, so that was a pretty cool heads up. I didn't know that with them, but...
Well, I'm going to write that down so I remember it, Canadian. Okay, great. Great information. Thank you so much for calling.
Thanks, Basil.
Thank you very much. Speak to you soon. Let's go to Joe in Rochester, New York. Hi, Joe. How are you?
Good, Basil. I called last week. It was on U.S. Steel.
Yes.
And it was going to get called away on the 24s, the November 24th.
Correct, yes.
And so you gave me a little tip to give you a call back this week, and I see it did pull back some today. But,
now this is what I'm looking at, folks. We're looking at U.S. Steel, which is X, which is what we're along in the Traders Corner of my newsletter called The Opening Call. We're along from 2182. It hit a high of 27.66. I had a peak F/C. It almost made that D. Remember, that's what I was looking for, just 1 penny above 27.66. It went to 27.65. So, wow. So yeah, that's how precise my methodology works. Now it says that alternative count of F/C is probably favoring weakness. Now, weakness is what you were wanting to see, correct?
Yes. Well, I guess just what you would do if you were me, I guess, in this situation.
So now, as I remember it, you would be called away on a pullback to what levels?
Well, I sold the 24 calls, and that was a couple months ago, the November 24s. My dollar cost average is, I think, like 22.
Yeah. Now, let's see. I have to figure this out. I haven't done this one.
I didn't intend to make it that close. I just didn't think it would rocket up to 27 at the time I was selling the 24s. Hello?
Working against you, and we need to ameliorate what would happen if it was to go into the 2767 area. So, oh boy. Okay, I'll tell you what I'm going to do. I'm going to do the United States Steel, that bounce that it had from the 20 to the 2765. It went to 2770. Wait a minute, where's 2770? I don't have 2770 anywhere. How did it do that? That was on the 8th. That's interesting. I've got 2765. So my 120-minute chart has an error. It says 2770. I don't know which one is the error, actually. Okay. So All right. I'm going to make this as easy as I can. At this particular point, I see United States Steel pulling back. X is the symbol, is at 26.56, down 64. I think it's going to fill the gap, and it's going to pull back below the 25. No. The 25.91 is the level that it needs to hold between 26.20 and 25.91. I'd even say 25.86. That's going to be an important level for steel to hold. If it pulls back further from that, it says that the weekly chart, which was very strong and still very strong, could have a pullback about another point lower. Now, let me give you the numbers, and you tell me what you would do at each stage. If it pulled back to 26.10, it's a 25.56. Let's call it 26. You would only be called in if it goes to 24, right?
I'm going to be called away at anything above 24.
Anything above 24, right?
Yeah, but I was wondering if you thought it was coming, it was going to do a pullback to 25 and change or something. Maybe
the way I'm looking at it right now, excuse me, the way I'm looking at it right now, I think it can pull back just underneath 26. 26.10 to 25.90 is probably the area that it should try to bounce again. So I don't know if I would do anything at this particular point. I'd probably just try to wait a little longer.
Okay.
Because if it's going to bounce, it has to bounce by this afternoon. It should get to 26.75, and by tomorrow it should be testing 27.44. The way I'm looking at it based on the 120-minute chart, my impression right now is it wants to pull back a little bit more.
Okay.
And you see, I'm looking at it as possibly an intermediate-term position, so I might consider adding to it in the low 25s. So that's the area where I say to you, now you've got to be careful, because now there could be a stronger bounce if it gets there and holds. You do not want a much bigger bounce than that, correct?
Well, here's what I guess I'm thinking. Let myself get called away on Friday, and then just put a buy-in at 25 in the low 25s to go back into it again. Yes?
That's not it. But, yeah, I like that idea. I think that makes the most sense right now.
Okay.
Yeah, I think that's the way I would trade it that way, and then you would own the stock, and you would be able to manage the stock as just a chart pattern instead of having the complexity of being called away or not called away. I think that's the way I would do it right now.
Okay, Basil.
And another reason why is that peak D in the weekly says to me, it could be a week or even a 2-week hiatus because it's a spectacular move up until now. It just needs a little time. I like that. I think that's the best strategy right now. Okay.
All right. I appreciate you giving me time on the phone and giving me advice on it. Thank you.
Well, that's my thinking at this particular point, and it's if it coincides with what you're thinking, that's what I would go with. And I'm watching it on the 120-minute chart, and it really does look like the H pattern is probably going to fail if it takes out 26.13, then it's going to go to the 25.90s or 25.80. Hope that helps you.
Okay, Basil, thank you.
Thank you very much for calling, Joe. I appreciate it. We'll be back. Dow's down 54, S&P's down 5.5. Basil Chapman will be back, 877-927-6648, and we'll continue looking at the investment business base.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on part, plus a 64% on rest at Hertz Global as a core position for 6 months before exiting the position. A current position entered as a turnaround company with good technicals based on Basil's waveform is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to the Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to the Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks, we're all back, and we're looking at a stock. Whoa, I was asked about it in the den. I've been asked, can I look at SXC? I'm long but worried about the steady rise with no interruptions. Let me tell you, this is a particular... I didn't have a chance on Friday in my webinar, but I'll be showing charts like this, a couple of charts like this. I call them the snail. Oh, actually the caterpillar. I'm sorry, this is the caterpillar. What it looks like, that's the green, the caterpillar that loves to eat the lettuce. What is it? Something caterpillar that you love. I read to my kids, and then I read to my grandchildren. The hungry caterpillar. This is the hungry caterpillar. It is just an incredible chart. Look at this daily chart. Tell me this doesn't look like a caterpillar crawling up a twig. Look, little green lines there. Changes color momentarily. Goes green, green, green. It's just an incredible thing. I always talk about this. Merck, as I recall, way back, I think it was in the 80s or something like that, I was looking at these charts, and there were a couple of pharmaceuticals, especially Merck, and it just kept them going just like this. Narrow band in an upward trajectory, holding the 9-period. Actually, I didn't use the 9-period moving average. I don't remember what I used at that particular point. That reminded me that in a chart like this, the one thing that you can always do is to look back and say, it's like Apple was at one point, that's the chart also looked like this for a while. that you could buy it at any point and say, oh, this has to be the top, and I'm buying it. Oh, geez, it has a little tiny pullback, and the next day it moves higher, and it just keeps going higher. And every time you look back, you say, I could have bought it anywhere. It's trading at 21.38 SXC, Suncoke Energy Inc., and right now it's got a D. And this time the D, I think, has a little bit more importance than the other, because it's a leg D in the weekly. I didn't have a chance to do the 120-minute chart, but that says it could be just in B, so there could be a little bit higher to go. And my recommendation is, Ivan, if you've been in this all this time, I don't think I'm the guy to actually give you information, because you're the guy that should be giving me all this information. But what I will say in my particular technique, because it's stretched a little bit further away from the 9-period moving average, it's in the area where it does have a little bit of a pullback, I would suggest taking a little bit off right here for the 3 reasons. One is it's a little extended if you use the 9-period moving average as the base, and then a percentage gain to the upside. It's in that area that says it could have a little pullback, number one. Number two is the weekly chart is in leg D, but I have now the monthly chart also in leg D. And that just says to me, this is the area where you've got to be a little bit careful, because it does start off in the daily, any pullback. And I don't want to actually say to you, get out because what a gain and all that. I'm going to say to you, my methodology says, when I start to get a divergence between the stochastic, which is at 90% and still very good, and the MACD, which is just giving that little dolphin look, that little beak that says I'm about to start turning down, that's where you can either say I'm taking off something here, 21.38, or give it like the low of today, some fairly close stop for some of your position, maybe 21.11, it's a 21.38, or maybe even under 21. And that's what I would do. I'd have a trading stop on this particular position of maybe 40 cents. If it goes a little higher, you've gone a little higher. If it doesn't, you get taken out, but keep your call. It's just because this is the area that you can start to expect some kind of choppiness to sideways movement. Will it happen? I don't know. Everything about it tells me the fourth buy mode, the fourth buy mode after going peak F, then peak D, almost an instant restart, says that this is the move that probably is the extended one. So I hope that helps you. So folks, my service is the opening call. Check it out, front page of TFNN. Thanks for being here. Now the options host is North Van Hooser coming up in the options hour next. Great show. And maybe Joe wants to call there as well and get some more information about these option positions, these strategies. So I'll be back later on. I'll be back tomorrow. See you tomorrow. Have a great
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.